Okay, so you're in a trade and you close the trade in profit. That's real money in the account. That's a win, right? Not necessarily. Because that decision might be exactly what's stopping you from ever becoming profitable. Why were you closing that trade manually? If you had a trading plan, your plan said that trade should have reached a target point. If you're closing it manually, it means you weren't automatically closing the trade as set in your broker when it hit the target. You closed it earlier. You didn't just take a smaller profit. You broke the reward to risk that your system depends on. We humans prefer certainty over possibility. Real money taken now feels better than maybe more money later. So you see that profit on the screen, you know if you push that button, you can lock it in instantly. So closing early feels like the right move. If you didn't have a trading plan, closing early only means relative to what your plan says you should be closing it. But if you didn't have a trading plan, you didn't have a defined system, you were just guessing. But if you did have a trading plan and you're closing trades early before they hit the target, well, that's real damage you've done to your system. Because your system expects a certain amount of losses, a certain amount of winners, and if you keep taking those losses that you hit from time to time, but you don't take the full value of the winners because you cut them short, well, the math stops working. By taking any profit as opposed to the correct amount of profit you're supposed to take, you might think you're taking profit now, you're preventing a trade that might have turned around and hit your stop loss. But if you keep doing that across all your trades, you'll be lucky if you break even with your account, never mind making profit. You have to let the trades run according to your plan.